Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. All right, so yesterday we talked about quite a number of things with regard to price and what needed to happen, and we talked about whether the bears were going to be able to follow through and whether the process of what they needed to do which was going to progress. The process is progressing. They had a good day yesterday of executing where they needed to execute. Started off by testing and holding weekly pivot and the 9-day off the open, progressing price below the green line here, the 20-day simple moving average, the middle Bollinger Band, whatever you want to call it. Now, they gave it up a little bit from 70 back into where they closed it up at 5,600. So they laid down for about 30 handles, which is kind of sucked for my runner, but whatever. And now we're just back to battling over a different rounding. So we had been battling over 5,700. Now we're battling over 5,600. So quick 100 handles, which we talked about last week, the concept of the quick 100, it goes both ways. We had a quick 100 up. We've had a quick 100 back. So it's been a really nice week to sit and trade this stuff. You started to see the string of strength in the Russell and the mid and small caps kind of wane a little bit. And you saw the broader index, the broader S&P 500, stop its, basically relentless streak to the upside yesterday. It was still, it was basically barely green, and you can see a little bit of that rejection start to follow through, later in the day. It looked like the broader market late in the day. So daily chart here, you can see resistance at the weekly, resistance at the 9, battling over mid-band, battling over 5,600. Hourly chart, there's your 20-day. This is the deal today. Where do we close relative to the 20-day? So the question is, does the 20-day hold up as resistance? Can they take out this low down at 68.5? So the 68, 67, 68 to 70 area is going to be important. And then we'll have to see where we close. You got volume weighted average price coming in 91.5. Proprietary moving averages at 92.5. Hourly mid 97. Daily mid 5,600. So that's your key. Overnight low is 68.5. There isn't a truckload to say, except that the bears had a good day executing yesterday. The process of them turning this into more of a two-sided market is progressing. We've now moved into the second stage of that conversation, which is where are we relative to the green line? The green line being the daily mid-band, and that being one of the baseline things that we've looked at for over 10 years to tell us whether we are a buy dips market or a sell rallies market. Buy dips, sell rally. We will, we're going to find out. We're going to find out, especially today, but more importantly as we head into next week. So you have your prices, you have your parameters. This isn't going to be a long webcast. We have to see how it plays out. It's a wait and see type of a situation. Be very mindful of the 92 to 5,600 area off the open, and I would use that green line in a wider sense as a bull bear line. You want to be long above and you want to be short below. All right. Everybody have a fantastic day. Have a fantastic weekend. Take care. Trade them well. We'll talk Monday. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.